Talking about in the energy stocks, look, pretty good performances. One of the most, I suppose, stark ones, though, once again, Woodside, very, very subdued, sort of trading down 1.65%. The woes continue. Does it still hark back to last week, late in the week, when we got that oil production downgrade?
Look, we did see some life in Woodside Petroleum yesterday, but it does look like back to that downward movement. And brokers have become quite negative on Woodside Petroleum after that production downgrade on Friday. So it looks like a continuation from that. But if we have a look at the best performing area on the market, it was by far the property sector. The property sector has seen quite a bit of support in the last couple of sessions, not only on the back of the Black Friday sales, but it's also one of the highest yielding sectors on the market at the moment, with a yield of 7.2% compared to the market average, which is 5.4%. But a fantastic day on the Australian market, up by 0.4%, especially when you contrast it to some of the other markets around the region. Japan's down by 1.3%. We're seeing Korea down by 0.8%, and the Hang Seng down by 1.9%. So we've really bucked the trend, and that's because the other markets have focused in on the Standard & Poor's downgrade of the 37 global banks. But in Australia, some extremely positive economic data. We did see those CapEx numbers coming through, with a gain of 12.3% for the quarter, and that's really seen the Australian market performing much better than their counterparts around the region. Also some strong volumes today. In fact, $5.6 billion worth of stock being traded. Not only are we seeing end-of-month movements, today is the last session of November, but also an MSCI rebalancing of indices. So that's had an impact on volumes as well. So altogether, the Australian market doing pretty well, given the Standard & Poor's downgrade that we've seen, and we've seen some pretty good economic numbers which have helped.
James, just the charts, is it 41.44 that is the one to keep an eye on?
Very closely getting up to that resistance level of 4,144 points. And we mentioned it earlier on in the week, but we're fast approaching that mark. So that will be the first test for the market. And if indeed we go past that mark, there are a number of other levels, but essentially targeting 4,300 points next. If we have a look at the Australian market, though, one thing we should start to see in the next month is some money flowing in. And that's really because of the completion of mergers and acquisitions, as well as dividend payments coming through. So about $20 billion expected to need to find a home before the end of the year. And that should be a positive as long as we don't see any negative headlines coming out of Europe. So the possibility of a Santa rally really dependent on those headlines coming out of Europe. But in terms of money inflows, around about $20 billion due to seek a home. So hopefully that's good news for equities if we can maintain these levels, or indeed start trending back up again.
In terms of, can we take any heart moving into December from what we got in November in terms of the market performance? It was a rocky ride.
It was a rocky ride in November, but remember, October was a fantastic month where we saw extreme outperformance. So if we have a look at the month of November, we have unfortunately finished the month lower. In fact, if we have a look at a monthly chart of the Australian market, this is what the Australian market looks like for the month. So you can see it's been very volatile. We even dipped below 4,000 just very briefly on the Aussie market. And if we have a look at what really drove the losses, not surprising to see the financial sector coming under pressure, given the problems that we've seen in terms of Europe being very much in focus, and also the big four banks. They've all paid their dividends now, so really not having that dividend payment to support share price. So the financial sector down by 6.8%. We've also seen the material space come off quite significantly. In fact, commodity prices have been under pressure in the month of November, with copper prices down by 7% and the material sector down by 6.8%. On the flip side, though, once again, we have seen the defensives outperforming the healthcare sector, the utility sector, the telecom sectors, all finishing in the black, and the property sector, the best performing sector in November, up by 2.3%. If we have a look across the top 200 stocks, most of them did see losses, but 62 managed gains. We did see 5 of them trading steady, and a massive 133 stocks finishing the month with losses. So altogether, finishing in the red for November, but as I mentioned, $20 billion worth of money looking to find a home. Hopefully some of that flows back into Australian equities, but really dependent on that European situation.
And Julia, look, a little bit of corporate news about a big win, obviously, for Metcash in the court with the ACCC. Look, I've never heard such a confident CEO before the court process went ahead in Andrew Wright, the Metcash CEO. He seemed to all along almost welcome the opportunity to have a fight with the ACCC, and in the end of the day, he got what he wanted.
This is an important ruling not only for Metcash but other mergers and acquisitions that is due to happen, the definition of competition, and of course the Austar-Foxtel merger deal as well. So Metcash, after this decision, having a positive share price performance, up by 1.5%, and they can now go seeking interest to sell those 80 Franklin stores to the independent retailers. But I guess the bigger implication is for the Austar-Foxtel merger, and if we have a look at Austar shares, a massive jump today on the back of this ruling, up by 3.9%. And the big question is on the competition of the definition of competition when it comes to the retail versus the wholesale market. So we're going to be watching that ruling for Austar and Foxtel, which is probably due around about February next year and will be the key driver of Austar's share price. But in terms of Metcash, we also saw coming out with its half-year profit. The numbers probably not up to scratch, but the positive part of its results was the upgrade that we saw to its full-year forecast. They are now predicting from the low single-digit growth to mid-single-digit growth. So that's an upgrade on their previous forecast, which was just looking for low single-digit growth.